Treasury official. The housing woes far from over.
The full impact of the upheaval in financial markets has yet to play out. A top administration official said, Treasury Undersecretary for Domestic Finance appeared before a House committee as the worst housing slump in 16 years or more, and roller coaster financial markets cast a shadow on the economy. What we have is a severe lack of investor confidence anymore. Stocks fell sharply Wednesday morning as a nervous Wall Street digested a report showing a large drop in pending home sales. The Dow Jones dropped about 160 points in morning trading. This process is far from over. The ultimate impact of these events on the economy has yet to play out. An estimated 2 million adjustable rate mortgages are scheduled to reset this year and next, jumping from low teaser rates for the first 2 or 3 years to much steeper rates that could cost borrowers their homes. The wave of resets could crest during the presidential and congressional election campaigns next year. And the issue already has brought politically tense debate over possible responses by the government. Defaults have spiked in recent months on high-risk subprime mortgages, loans that were extended to borrowers with weak credit histories. The rising tide of soured loans forced a number of lenders into bankruptcy, while hedge fund and other big investors and securities backed by subprime mortgages took deep financial hits. The turmoil spilled over into global credit markets in recent weeks as investors faced the prospect of not being repaid. Credit tightened even for more creditworthy borrowers. Stock markets around the globe gyrated widely and key market indexes were knocked down. The Federal Reserve and other central banks swooped into the markets, pumping tens of billions of dollars into the financial system to help banks and other institutions. The tighter access to credit, making it harder for consumers and businesses to borrow, has raised anxiety that the economy could be hurt. In keeping with its promise to aid the markets as needed, the Federal Reserve has added a relatively modest $5 billion to the banking system. Warning, this mess will only get worse. Bubbles have a way of masking what would otherwise be self-evident truths. And as the credit bubble in real estate dies a dramatic, not pretty death, a very simple truth has resurfaced. It's not a viable business when you lend money to people you know can't pay it back. Cheap is more than skin deep. Now, the gaping hole in the side of the mortgage market appears to be impacting the price of housing stocks, just as it will surely impact home sales in the coming months, causing that vast river of denial running through Wall Street to dry up. And as it does, people will be able to see that there is a gaping hole in the economy